To the rest of the news on the local share market now. Earlier I spoke to Marcus Padley from Patersons Securities. Marcus Padley, the market seems to be treading water at the moment. Is this a pause before a Santa Claus rally?
Well, it is a pause, Tiki. A bit optimistic to hope for a Santa Claus rally after the market's rallied all financial year, but you never know. But we are having a bit of a pause. Resources coming off at the top a little bit as the US dollar goes up for a few days for a change. And we've also got the QR National IPO pricing coming up on Thursday and Friday. That's sort of $5 billion worth of stuff, which institutions are probably keeping a bit of money in reserve for that.
Better day for the banks today. It's unusual for them to outperform the resources sector at the moment.
Yes, certainly is. Since the beginning of the financial year, the market's up 9%, but the resources and BHP are up 19%. In the same time, the banks are only up 4%. But as we all know, banks have had great results recently. Everyone's got so good, everyone's got upset about them. But it's left the banks on a PE of average 10.6 for the big four. The historic range is sort of 10.5 to 16, so they're right at the cheap end of the range. Average yield 6.5%. The only crime in the bank sector is that they're not resources stocks.
Now, as we've just heard, the Reserve Bank has released its boardroom minutes. What was important there for equity traders?
Look, it was a fairly sort of dovish, is what everyone's calling it, less hawkish set of minutes, which was basically saying they've moved seemingly preemptively to stave off inflation, which has bottomed in the cycle. The general feeling is that it's less likely they'll need a rate rise in December than previously, so the Aussie dollar came off a little bit. Brokers are still divided whether we'll get another one in December. People that think they do think, why not just get it over with, and others think they'll wait till February. Either way, it's not a big market driver.
There's been more mulling over AMP's bid for AXA Asia Pacific.
Yep, after AMP put their bid out yesterday, they went up about 4.3% yesterday, and that was probably because they got some funding help. They're going to issue subordinated debt, and AXA themselves, or the parent, is going to help them by taking a lot of shares instead of cash. So no big capital raising. AMP went up today. One of the AXA directors has said that he cannot recommend the bid yet, which means only 5 out of 6 have, and it's conditional that it's a unanimous recommendation for the bid to go ahead. I'm sure they'll get him over the line at some point, but there was a bit of concern maybe that they'll have to pay more or something like that. But I would say they'll get it over the line eventually. AMP dropped about 3% today on the back of that. They yield about 6.3%. It's quite a good time to buy them, I'd reckon.
All right, Marcus Padley, thanks again for talking to Late Line Business.
My pleasure, Tiki.